What is happening, investors? It is your boy Jack, and today we're going to be speaking about something that has been highly requested on this channel. We're going to be speaking about this imminent stock market crash that absolutely everybody on YouTube is speaking about, but I want to put my twist on it. What I want to do is take a look back into the past and see what's happened during tough times in the past, because so many people are very quick to say that the situation we're in right now is one in a lifetime. And I most definitely do agree. It's a crazy unforeseen situation that nobody could have predicted. But crazy unforeseen situations that nobody could have predicted have happened many times in the past. So today I want to speak more about than just the unemployment rates, the Fed negative interest rates, all of the things that absolutely everybody speaks about. And I want to just speak a little bit about the past and about psychology, and I want to try and make things really simple. That's what we try to do on this channel. We try to just make things as simple as possible. So today I'm going to explain why I am not selling stocks, why I am still in fact buying stocks pretty much every single week, as you will know if you are up to date on the channel, and why an upcoming stock crash does not scare me. Before we get into it, guys, I would massively appreciate if you just smash that like button for me. It helps me out so much. It helps the channel grow. It means so much to me. Subscribe if you're new around here. We're on the road to 4,000 subs now, baby. And drop me a comment with your thoughts. I am genuinely interested in knowing what you guys are doing. You know, if you're on the sidelines, if you're not buying any stocks, or if you've just sold every one of your stocks and you're waiting for this imminent crash that everybody seems to be speaking about. But now, let's just have a little bit of chat about what could potentially happen. And I do want to get it out there from the beginning of this video. I'm not a financial advisor. Everything I say today is just my own thoughts and opinions. Keep that in mind the whole time, okay? So before we get into anything, I want to speak about this. I want to speak about something that everybody on YouTube speaks about, and that's dollar cost averaging. If you ever see me use the little letters DCA in the comments, this is what I'm referring to. And this is my entire investment strategy, and it is really simple to understand, but it's also historically been very effective for a long-term investor. And also keep in mind that that's what I am. I'm a long-term investor. I plan on holding my investments and investing for decades and decades. But what dollar cost averaging is? Dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of a target asset in an effort to reduce the impact of volatility on an overall purchase. That's a really elongated way of explaining it. Essentially what it means is that, say for example, I want to purchase some Amazon stock. This week, maybe I'll purchase $100 of that stock. In 2 more weeks, I'll purchase another $100. In another 2 weeks, I'll purchase another $100. And it doesn't actually matter what the price is. I'm going to purchase those stocks no matter what. I spoke about this in one of my recent videos when I just purchased, I believe it was Facebook, Microsoft, Apple, and Amazon. And I said that the cost of the shares didn't matter, because a lot of people do believe these, giant tech companies to be overvalued right now. And I can see your point of view. I'm not going to get into that. But they could have been worth absolutely anything on that given day, and I would have bought them. And that's the beauty of dollar cost averaging. We don't have to try and time the market. We're not worried if our investments go down 10% in the space of a month during times like this. We're worried about where our investments will be in 3 or 4 decades down the line. I think when you start looking at things with that kind of a mindset, what happens the next 1, 2, 3 months isn't too important. I'm only investing for close to 3 months, and I've already lived through a market crash essentially, which is crazy to say considering there could be another one on the way already. And during this time, my investments went down about 25%. As a brand new investor, you bet that was scary, but before I started investing, I already knew that this was my plan, and I did not care what happened. When I started investing, it was right when everything started going downhill. It was both the best and the worst time to begin investing. If I had have waited an extra 3 or 4 weeks, I could be up a lot of money right now. But I learned a lot from when I started investing. You know what? I learned to be tolerant. I didn't panic. I didn't sell a single stock. Even when some of them were down over 40%, I did not sell them. I held on to them. I learned just how volatile the market can be and how quickly you can lose a lot of money, but you're only going to lose that money if you actually sell at a loss. A lot of stocks that I had who were down over 30% are now in the green for me. I just learned a lot in that very short period of time that will definitely make me a better investor going forwards, and it makes me a lot less afraid of the short term. Now what I want to do is I want to have a look at all of the bad things that have happened over the last 100+ years and see how that affected the stock market, the S&P 500 in particular, just to have a reference point. Now, we're looking at the stock market since 1900, and we can see when all of the big downward trends happened, okay? And that's what I really want to focus on today. Right now, a lot of people are saying it's a terrible time to buy, because the market could well go down another 20, 30+%. Nobody knows. Also keep that in mind, absolutely nobody in this world knows what's going to happen. So let's start it off all the way back at the roaring 20s, and what happened after the roaring 20s? The Great Depression. Absolutely everybody knows about this. Stock market dropped massively. So does that mean that if you were buying throughout the roaring 20s, that was terrible? Should you have not invested for more than 10 years just because, you know, at some stage there could have come a Great Depression that nobody could foresee? That's very poor logic in my eyes. Does that mean when it was here and it was here and it was here, you shouldn't be investing? No. Does that mean when the market starts to go down, you shouldn't be investing? No. A lot of people's logic is that this is where you should invest, right here at the very bottom. Nobody in this world knows where that bottom is. Absolutely nobody. And that's why I love dollar cost averaging. I would have bought stocks here and here and here and here and here and here the whole way through. So after the Great Depression, this would have obviously been the best time to buy. You make a lot of money. Ooh, World War II happens. Should you not buy stocks in World War II because the market's going down? No, it's the best time to buy it. And again, we see this massive run upwards. People are going to be thinking, wow, the stock market's been going up for years and years. I probably shouldn't buy stocks. It just keeps going up and up. Black Monday. A lot of people say this was a fantastic time to get into the stock market, and it definitely was. But what about here? You know, there was nothing particularly happening here, but it was a better time to buy stocks. And then boom, the tech boom. We see this massive growth. Oh no, there's a little bit of a loss. Should everybody just sell all of their stocks? No, you know, that's not how it works. Then the global financial crisis of 2008. Should you sell all your stocks here? No. Should you keep buying stocks? Yes. And then boom, we're going up. Now if we just have a look at the 6-month chart, we can see there was all of this steady growth, you know. Should you have been buying here if you're a stock market investor? Yes. And then what happens? Oh no, we start to go down. This is people's logic. A lot of people would not have bought on the way down because they didn't know where the bottom was. But they would have happily bought here. They would have very happily bought here, but they wouldn't buy here. And this is the point that I'm getting at, guys. It's just, in my opinion, the best time to buy stocks is pretty much always from a long-term point of view. Right here, the 27th of February, that's when I bought my first ever stock, right here. And we had a little bit of upwards movement, and then boom, we flew down. It went down so fast. But I bought here, 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 I bought here. I bought the whole way. So from a practical point of view, not even speaking about anything that's going on in the world right now, there's not a hope that I'm just going to sell all of my stocks. I'm not being silly about it either, okay? I'm not just pumping absolutely all of my money into the market. Now, I have been very aggressive with my spending, but I still have way more cash on the sidelines than I do in the market right now. But when we look at this chart from earlier, showing the market over the last 100+ years, there was no one time where you should buy stocks. There was no one time where you should sell. If you were a time traveler, if you knew exactly when everything was going to happen, then of course. But if you just bought stocks the whole time, you would have made an awful lot of money. Even if there was certain periods of time, you would have been down money. So if you don't have that long-term outlook, if you can't look 30, 40, 50 years into the future, if that's not the way you see your investments, I don't know what you should do. But if that's the way, if you have to share those same opinions as me, that you plan on holding your stocks for decades, I think the best time to buy is pretty much every single day. But I'm not a financial advisor. I know I already said it, but I'm not. Don't buy stocks just because I say I'm buying stocks. So am I saying that I don't think there's going to be a stock market crash? I most certainly am not. There most certainly is a reality where a stock market crash happens. Given everything that's happened in the world these last few months, and the S&P 500 is only down about 13.5% as of right now, that does not make a lot of sense to me, given all of the bad news that's happened, given the fact that a large proportion of the world is still completely shut down economically. That doesn't make any sense. The thing is, I just don't care if the market goes down. I really don't. And when the market does go down, that's when I will get more aggressive with my purchasing. So I'll still be dollar cost averaging. I just put more money in when times are worse. When I first started investing, right around here, I was only doing little bits and pieces. And then I saw just how low the market has gone, and I really understood the severity of what was happening. I got a lot more aggressive, pretty much from here all the way over to here, and then I slowed things down a little bit for a while, and then I started making a little bit more money. I'm actually going to have a video coming out soon about how I make money right now, so I got a little bit more aggressive again, despite the fact that, you know, it's still up a little bit. I just think if you're a young person like me, keep in mind that I'm 22. A lot of us guys are making way too big of a deal out of what's happening right now. We are very young, right? If I lost 90% of my income tomorrow, it wouldn't even really matter. I'm young, I can start again, you know, it would mean nothing. So if I lose 30 to 40% in a stock market that I 100% fully believe I will make back tenfold in the decades to come, why would I be in any way worried?
But Jack, what if it's a dead cat bounce?
I don't care. I secretly am hoping that the market does go down lower, because it means that I can buy more stocks at a cheaper price, even if I temporarily am down quite a considerable amount of money. If in the short term being down 20 to 30% means that in the long term I'm up an extra 300 to 400%, you bet that I am going to be delighted to be down 20 to 30%. I would very happily welcome a dead cat bounce. What if negative interest rates come to the US? Again, I don't really care from a long-term point of view. If interest rates go negative, it's going to be for a very short period of time and it won't affect me majorly. Jack, the market has to go down. Unemployment could surpass 20%. And yes, the market most definitely could go down. I'm not arguing that point whatsoever. I'm just saying that if it does go down, it does not bother me. I don't think it's anybody's business predicting whether or not the market is going to go up or down if you follow the laws of dollar cost averaging over decades and decades. And that's why I'm not worried about the stock market crash, and that's why I haven't even made a video on this yet. It's just that a lot of people have asked for it, so I just wanted to get my thoughts and opinions out there, because they are also very different to a lot of other people, and I'm trying to make this really simple to understand from my point of view. A lot of people will probably just think I'm really ignorant in my thoughts and the information I'm giving out is absolutely terrible, but again, I'm not a financial advisor. These are my personal thoughts and opinions that absolutely nobody has any business agreeing with if they have different opinions, and that is absolutely fine by me. In short summary, I fully expect the stock market to go lower. I'm not ignorant, I'm not stupid. That is what I would expect to happen, and if I had to bet on anything happening, it would be that. In the short term. In the long term, I always expect the stock market to go up, or else I wouldn't put any money into it, because that would be absolutely and utterly idiotic. I more than likely am going to get more hate than usual on this video, just because the views I share aren't what a lot of other people are sharing. So if you've watched till the end and you enjoy my content, please do help offset some of that negativity by hitting that like button and dropping me a nice comment, because they do genuinely make me feel good. A lot of people on YouTube make things really complicated, and that's completely fair, because it is really complicated. The stock market is a really complicated place, but I like to make things as simple as possible. That's just the way I like to make my videos. So hopefully some of you guys can appreciate that. You can appreciate where I'm coming from. If you are one of those people, thank you so much for watching and for continuing to support me. The love as of late has been absolutely mental. I know I keep saying it, but I appreciate you all so much. So yeah, I'll leave that video there, guys. I won't drag it out any further. I will catch you all for tomorrow's video. Have a great day. Peace.